The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648, dials up 109 and 25,560. This is going to be very important. Why? With that bad news with Boeing getting just crushed early morning, just hammered because of the tragic news, the Ethiopian Airlines crash. This is going to be quite important because it's as if when I did my homework over the weekend and I sent to subscribers to my opening call, the fact that we should be seeing a rally because the Chapman wave arch formation with the left side, right side price time match and the Chapman wave inside wedge support levels, they've been tested on Friday. And that usually allows for some kind of a bump to the upside. Not only that, stochastic had come down sharply, on balance volume, etc. So that's what we were anticipating. I also wanted to spend time looking at different chart patterns. And the question I had on Friday, what was the question? It was more a statement about a head and shoulders top. It's a very specific pattern. And let me just deal with that right now. So in my research, and this is a research that the person who asked the question could have done, but I just did that. There is a way of looking at the head and shoulders. And basically, what are we looking at? A head and shoulders means the market, whatever you're looking at, has rallied. It then pulls back and then rallies again. The distance to the upside after that is not that important. Usually it's not that great, but it rallies. Then it comes down. Now, the ideal head and shoulders is when the neckline, and that's what we're really looking at, the next neckline is horizontal. So over the years, I've seen reports and commentaries about head and shoulders patterns where the preference is for a slightly sloping down. I've even seen it where it's preference with a slightly rising neckline. So this is the one that's kind of a classic one. So it comes down and then it rallies. And then what you're looking at is the high that was made on the little arch, that first arch, gets taken out because it goes above that for the head. When it comes down, it doesn't go down very much more than that little neckline that was formed in that first shoulder. Then it rallies. I also like to think of it as the same time sequence. If you see a head and shoulders with one of them just going on forever, yes, it might serve the same purpose, but it doesn't have the same impact in the result most of the time. So this one here is kind of perfect. It makes a nice trend line, holds the trend line, and then eventually that right shoulder, which is almost at the high or a little higher or a little lower than the left side shoulder, breaks down below. The most important neckline in this case is not the horizontal one, it is the slight diagonal one. That's, to my knowledge, that's the one that majority of people look at and treat as a head and shoulders that they want to trade. I've always said, like the cup and handle, my least favorite technique because the other techniques that are superior, the same as the head and shoulders, if you can even think of it as a cup and a handle inverted, not one of my favorite, because by the time you recognize it, when it breaks down, you've already broken, you've taken away a chunk of the gains that you would have if you used other techniques. The arch formation, the lowercase h formation, Chapman wave, that Chapman wave vertical line, the diagonal line that gives you the target resistance or the target support level. There are a whole bunch of things, MACD, stochastic. So I just wanted to show that that's what I'd be looking at. Now, the reason, first of all, it wasn't mentioned that we were looking at a daily chart of the IWM, but in a follow-up email, another root email, it's mentioned that it's the monthly. Well, I just, look, You can't have a Head and Shoulders. I don't even know where it's from. If you're going to the 160.53 high back in January of 2018, when you broke from the high of 173.39 in peak G in the Chapman wave, and you smashed to the downside and you went to 125, a 50-point decline, that's the neckline that was not only pierced, but it's down. We're down. There's no Head and Shoulders here. There's another pattern that you can look at, which might use some of the techniques, but the Head and Shoulders is done. This is something brand. This is a brand new move to the upside. If you look at the weekly chart, I'd say it's a diamond formation, if you want to think of it that way. Not one of my favorite patterns either. Look, you've got yourself a diamond. There's the trend line up, trend line down, trend line down, trend line up, and now we're kind of at the apex. But there's no Head and Shoulders because not only have you broken down, you broke below the 200-period moving average. So we're all about technique here, and I just wanted to say, for me, and remember, I'm not the boss of Head and Shoulders techniques. It's one of my least favorite. I do recognize it. I point it out. I discuss it, but I discuss it as being a late. It's almost like using some moving averages. By the time you recognize it, it's already too late. So with that said, I just wanted to say, I don't see this as a Head and Shoulders pattern, not the classic, and not in any way. It is a pattern that could fail, sure, but it's got nothing to do with the Head and Shoulders, as far as I'm concerned. Let's get that out the way. All right, now let's go to some other questions that I had. And the first question was, what is the relationship that I'm looking at between the daily and the weekly and the monthly charts? Let's just go to, we can say with the IWM. IWM, the daily chart, made this 8 or 9 point candle move to the upside, goes to 159.50 on the 25th of February, and that is exactly the same number. Look at this orange or pink trend line, Chapman wave inside wedge support line. Look at the left side, right side price time match at 150.61. It filled the gap that we were looking at right there, the gap of the 12th, from the 11th to the 12th of February, between 149s and the 151s. It filled it in, and now there's a nice pop to the upside. So the 200-period moving average is just over that right now. I am suspecting that I'm about to put in an arch formation, and in this case, we might even see something that resembles a Head and Shoulders. Why? Because you've got your little shoulder down there. We haven't taken out the neckline. That's a possibility. It's a rising one, but that's not the pattern that I like to see. Okay. The MACD is very negative. The stochastics had a nice turn to the upside, now at 14.94%. That's good. But this daily chart says a lot more work needs to be done with a lot more testing of probably the 149 to 148 area over the coming week. The weekly chart says fantastic slide, 27% from 173 in August of 2018 to the low of December, end of December, at 150 point, what did I say it was? 125, I think. Yeah, 125.81. Fabulous rally to 159.50, consolidating. MACD is good, stochastics really good at 91%. That's the way I want to look at the markets. Just real slow, very thorough, no preconceptions that we're going down to 0 or we're going up to 1,000. See what we've got, try to deal with it. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, just real quickly, the E-mini, the little peak F, top in the 2-minute, peak E in the 5-minute, and possibly a leg F in the 10-minute. Make it real simple. At 27.75, I'm doing the March. I haven't changed over, haven't needed to. March contract 2775. Let's see if at any point during the day there's a close under 2770 on any 10-minute bar that lasts for 2 out of 3 bars. That probably says we've made some kind of a high for the day, and there might be a little bit of a bounce, further bounce tomorrow, but we're probably getting some kind of toppy area. But if there's a move into the 2781s, 2777s was the high. So 2781, that is really good action. I think it's going to be a little tough. We'll see. All right, couple of questions. So in the Dow, we have those 2 Chapman wave Roman candles. I spoke about it on Friday. We went under it, and we've now gone to 25,208 as the low. And I've drawn in the arch formation. Yes, we could still bounce towards the 25,665. Really impressive that Boeing, and this is back when we were going to the high, I did a lot of work, and I said, you know what, I think I want to get subscribers to buy the to the 445, maybe the March put, but maybe even April. And I did some work on it, and then I thought, you know, we've got other things that we want to do. We're shorting the market. We're doing a whole bunch of other things. And I stepped aside. I actually put it in here. I've actually mislaid the name of the put position, but it was, at the time I was thinking, wouldn't it be great if we could get it under 5, somewhere in the 4s? But it hit 4s. I can't even imagine what it is right now. Well, I can. The Boeing's at 370, so that would have been the 445. Take away $4, subtract it. So let's call it 440. So that would have been, wow, 70. That would have been a lot of points, a lot of points. And unfortunately, it would have been in the back of a terrible tragedy. So that wouldn't have been a very nice thing. However, that was the position that we didn't take. I thought about it a lot, and then at the last minute, I blipped it out and I thought, we've got other things to do, and we did it. So as it stands right now, the question is, what are you looking at? I'm looking at the fact that we still have some core positions on the long side that we got in very well I want to keep those. I don't see any reason right now to change them. In fact, I want to add to them, number one. Number two is we have some short positions. We did take, I mentioned on Friday that I suggested to take something off right at the opening, and we've got some very good prices, and we've still kept the core position of the shorts. And these are either sector short or index shorts. But most importantly, I said to subscribers, and I showed it over the weekend, these weekly charts are really something to behold. I mean, look at the S&P, SPX. There we go. Look at this. Hasn't on Friday touched the 9-period moving average. Today it hasn't even got close. The MACD is improving. It's not great, but it's improving. Stochastics at 93%. That is really good. So when I get the question, are we in for a severe turnaround to the downside that's going to test the December 24th and 26th lows? My answer has been for the last many weeks, no, I don't think so. But over the weekend, the more work I did on my next webinar that I'm preparing for, basically it's going to be like anything goes type thing. I'm going to emphasize what I've been speaking about for about 5 or 6 years right here, and that is the growing demand for socialist programs vying against the capitalist system. And if you look at all these institutions, these poor colleges, there's been a lot here in the Massachusetts area that have folded lately or about to fold. One of the reasons is they don't have capitalism. They don't have the support, the financial support to do the things that they love to do, which could be to blast capitalism. They can't afford to do it. So the whole thing about this period is going to be with the divisiveness is going to filter into and it's totally based on emotion, because I don't see it as fact, but let's deal with that as we move along. The issue is going to be, does the United States move towards more socialism? And where does capitalism fit in? And my greatest fear for the last 5 or 6 years, and it's increasing, is that capitalism, and I've always said that capitalism is one of the best systems we have. It's unfortunate that it can only conclude at a major top and make a major crash, and then it has to start all over again. If we could ever ameliorate that vulnerability of becoming so excessive, it would be fantastic. I don't think that's ever going to be, because that's part of human nature. That's number one. Number two is capitalism is going to come under increasing pressure. So that would say to me that you've got call it a fight, I don't care. Two schools now, or two big schools. One is going to be Trump owns the stock market. That's capitalism. And the Bernie Sanders, AOC, you've got a whole bunch on the other side that are saying, no, it's a very unfair system. And we'll have to just see how this plays out. I don't think it's going to end well. I think it's going to end very, very badly. That's what I wanted to get out today. Done. We're finished with that. Now let's go on to the stocks. I had a question about Plug, P-L-U-G. Plug is trading. Where did it go? Did I type it in? Then yes. Plug is right here at 2.13, up 18 cents. Plug is called Plug Power Inc. Let's see how long this goes back. I got a feeling, this goes way back, way back. Yes. I remember I had a friend who owned this. He called me one day and said, Plug, that's battery power. That's where we're going. And this was way back. And I think he bought it in the 4s, and it actually spiked up quite sharply. I just don't remember when it was. Was it before 2000 or was it after? I don't remember. No, I think it went to 10s. Yeah, it went to the 10s, and then he never got out. And then he just said, I've had it, and he got out at about 2 point something or other. And it keeps coming back into fashion, and it's a fashion thing, because I'm not sure yet what they've got. But basically, it's in play right now, and it's trading at 214. Now, would I get in at 214? I'd probably say to you, if you aren't in already, have a little patience. Why don't you just put in a bid at 1.90 to 1.84, somewhere in that area, your first bid, just put it in and hold it and see what happens. Because it's already hit the 200-period moving average in the weekly. I don't know whether this is a brand new, an old G, which is very negative, or a brand new A, which is extremely positive. Oh, I missed one. There you are. 8180. Oh, I missed one. So that's not. So that would be E, F, G. Yeah, this could be a brand new A. But whatever it is, you want to nibble, put this, this is one of those you can buy. Be prepared that it could drop by 50%. But looking out, my suspicion is this is in play and that at some point it'll hit the threes. So for the answer there is, be careful, but treat it as something like an option. You just buy it and you put it away and see what happens without it doesn't have a closing date. There you are. I'll be right back. Dow's up 90.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. Dow's up 81, S&P's up 31, and we're going to go straight to Greg in Austin, Texas. Greg, how are you?
I'm well, Basil. How are you?
I'm very well. You'd like to look at?
Gush.
So I'd never even heard of Gush. I mean, I know about Gush because of the Gushes and all that stuff, but Gush is the, is that the 2 times long or 3?
It's 3 of the XOP, I believe, but
yes.
It's more about, I had written you last week about the TVIX in the 30-minute chart. So I'm looking at the 30-minute chart again, and it came up again. So I thought I'd call you, and then I could write this down, and then I wouldn't be bothering you with this question again.
Okay. So the question is?
Yeah, so the last 2 days, Friday, it went to a low in the 30-minute chart at 843, and then at a price of 843 at open the market, and then the peak A at 889 an hour later.
Okay, so let me do this. I'm going to go, do I have a 30-minute chart right here? 30, 30, 30. I think I do. 120, 120, dump, 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 dump. I'll make it 30. Okay, so let's do this then. I'm going to go to this particular chart right here, and I think I did put in a 30. 555, 240, 10, 60. Let's go to the 60, and I'll make it a 30. Where is that 60? It's all very well. Oh, it disappeared. All right, excuse me for, oh, there it is. Okay, I've got my 30 right here. Okay, so you're looking at GUSH. Let me just do a little notation on it. So it has an A right there. Okay, here we go. A, retest the exact, let me just double check because the penny makes a difference. The low on the, at 10 o'clock on the 8th was 8.43, and then it makes a series of 844, 844, great. So that's an A. Then it starts another A, B, C. So I get it in leg C right now. Is that what you get?
Okay. Yeah, that was my question when it went back down on because it would start over the count over when ABC. So whether that was actually a B at 10 a.m. today, or if that was actually a C because it restarted. So
here we go. Let me just do this, a little Chapman wave study right here. Excuse me. Gosh, which is the daily S&P oil and gas bull 3 times. It's the same pattern as the XOP. Doesn't matter. We're looking at the price, and it doesn't matter the pattern. We're not looking at the price. But in the meantime, this gap down on the 10th, where it went to 843, it retests and it makes a peak A. The first time you can actually make a peak is when you've made a higher low to make the little V-shaped bottom. Now you can start thinking, okay, now the next higher bar starts leg A. If it then pulls back, it makes a peak A. And as long as it doesn't break under 243, which would start the whole thing over, it means that I want to count each. Oh, wait a minute. Oh, I'm so pleased you brought this to my attention. A. Look at this. So that A becomes an A minus, that very first A. And this little A right here, this candle on the big red candle on the 12 at noon on the 8th with a high of 875, that becomes a new A. And that makes a difference. Why? Because that high of 875, 878, went to 881 at 3 o'clock on the 8th of January. Is that January? Well, it can't be. Of 1/8. What are we looking at? 30-minute chart.
Should be March.
Yeah, it should be March. What's going on here? I don't want to be doing the wrong thing.
No, that looks like the right one.
Yeah, no, I've got the right one. So that now it becomes a B. See, that's why counting your peaks is your most important obligation. But if you're under the previous high, but below the start, but above the starting point, every single peak gets an alphabet letter, and that makes this leg D right now. There you go. So do you see exactly what I've done? I counted the next high, which was at 10 o'clock on the, it is a 3. Sorry, it's just a little far away from me. On the 11th, at 11, it goes to C, and now it's in leg D. You have to wait the full 30 minutes because at any point it might pop above $9.20. It's at 9.04 right now. So that's what we're looking at. We're looking at D. Now, let me do a little bit extra work. I always put a plus sign on the D because it's a D that other things can happen. Now, what's really important is if I had to have done this, and probably what I would have done right in the beginning, I would have drawn a big rectangle and said a horizontal, a sideways trading range can last a lot longer than your patience. If it occurs at the top, the likelihood of breaking the bottom support level increases the longer you go. If it happens at the bottom, the longer you go, the greater the chance of breaking to the upside, which is what we've just done. You can see the MACD this is a 30-minute chart on GUSH, the DX daily oil, S&P oil and gas bull 3 times long. And what it's showing is that the stochastic still at 89%, on balance volume's good, MACD is very strong. So does this answer some of your questions?
Yeah, it does. So my question was back on that A minus, that when that went back over it, whether than that would actually be a C at where the peak D you have currently, because it went, you count that A, B, C. But I see now that after you get the A minus, it starts all over again.
All over again, correct, right. And you know what?
Got it.
So I'm going to go to another step in the Chapman wave methodology, which I discussed in the chapter on the restart. It's really positive if this thing at the bottom starts to go sideways, does not take out the left side low, it makes a peak A minus, maybe another A minus, and then another A minus, and then starts to move. Once it does that, the chances of getting to a D increase significantly. So I hope that you can add to your potpourri of Chapman wave techniques.
Yeah.
Also, watch the MACD. Look how nicely the MACD is moving higher. And look at the way the 9-period exponential moving average has been acting. So this has all the ingredients for a bounce. Most importantly, the next step is how does it get into the gap? And does the 60-minute now show strength? Because that's what you want to see. You want to see it build in the longer time frames. You want to see it build strength. So far, this 30-minute is acting very well. Hey, good call. Good. Forced me to do a little thinking there. Thank you very much, Greg. Appreciate it.
Answered my question. Thank you very much, and that's very helpful. Have a great day.
Thank you very much. Good. I always appreciate it. Always appreciate when students ask these questions because it makes me think. You know, when you teach, you learn it twice. I love that. I'll be back. The Dow's up 97, S&P's up 32. Look at this sideways action here. Second cup formation in the 2-minute chart. Just won't give it up. Basil Chapman, Tiger Technicians Hour. I'll be right back. We want to be looking at gold. We're going to look at the euro. We're going to look at a bunch of things. Hold tight. We'll be back. Dow's up 97.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So this is a real quick question about the Euro USD. I'm going to go to Docu as a question that I had about as well. So, yeah, the Euro, look at this. I think that's a trough F right there. Maybe there could be a bounce from here, but you've gone for the arch formation in the weekly. You have not closed underneath the left side low of back in November. Yeah, November the 16th, week of the 16th, 1.121, bounces strongly to the 1.15s. Back down again, makes a lower low to 1.1176. Oh, this just does not look very good at all. USD JPY also, this is the yen. I'm sorry, this is the euro. The yen, USDY, has made a peak D, sell mode in the daily chart. Not a bad one, but a sell mode nevertheless. But the weekly is still strong. It's in a trading band. So it's acting okay. It's not bad at all. And as I said, the dollar didn't rally today with the gold down. It's holding. It's just down 0.01. It's holding near the highs of 97.71 and 97.35. Watching this closely. We still remain long on the dollar from a year ago, almost a year ago, April the 4th. So let's see what happens. Now, a couple of things that I was asked about. So was Boeing burp a perfect time to buy the Dow? I would have done that. The first thing I looked at when I saw the news yesterday, I said, wow, if Boeing, which has been worth, hundreds of points for the Dow over the years because of its strength. Just alone, I think, I don't even know how many points. It must be at least 1,000 points for the Dow. But at the same time, I'm looking at the charts of the dailies with that extensive move to the upside. And I don't think so. I think that we've got more time, maybe not that much in price. Remember, that's the reason why I made a big fuss about wanting to go through to see if I was wrong over the weekend about the head and shoulders, because it's absolutely the pattern that is fixed in my mind. You cannot from the head go double the distance between the what we call the neckline and to the downside, and then come back and think that you've got a pattern that says, yes, you're back at those old resistance points. You can do a whole bunch of techniques using that, but it's not the head and shoulders, not the way I know head and shoulders. So I wanted to take the time to be looking at different things. So when I was doing that, I said, you know what? There is so much strength in the move that we've seen from the December low, plus the V-shaped pattern is very close to 2009. 10 years ago, remember, we bought the very day of the low on March the 6th, 2009. We bought the Dow, but I bought it with a very wide stop because I said, I love what's going on here. I've got an inverted peak D coming up in my DOG, which is the one-to-one inversion. I had a whole thing. In this particular move, the move from the 24th to the 26th, that extra slump to the downside, whoa, maybe something's a little different. But the V-shaped pattern says, yes, that was a significant turnaround. It wasn't the H pattern that does a double take with a test. It could even be a 6-month test sometimes. You remember October and March of 2002 and 2003, we saw one set of lows in October, and some of those indexes didn't retest their lows in March of 2003. So this is the V-shaped reversal. I have to respect that. So the question is, we were short, we're still short, we took some profits, etc. Was that a great time to say, great profits, let's just reverse? I don't think so. I think there's enough coming up to say that there's going to be some testing. Now, I've said that before. I might regret it. That's just the way I'm looking at it here. We'll see where this move goes. This is a very extensive, with it bowing down so sharply, and yet the Dow is up 97 after being down 200 points. And it's just bowing along, and the S&P's up 33. I've got to respect that as being a little more than I anticipated for the bounce today. So it's a great question. I just think from the technicals that I'm looking at, we will have another chance to get long lower down. And that 200-period moving average of 24,900 in the Dow, S&P is a little different, has a slightly different pattern. It's at 2712. QQQ, the 200-period moving average is the exponential, is down at 168. The IWM 200-period exponential moving average is, oh, we've already gone below it. Of course, we've gone below it. Now we're above it. So all I'm looking at is I think the 148 is going to be tested at some point. Hey, that's the way I'm looking at it. So you say, well, over 3 points, 2 points, is it worth missing out another big move? We don't know. The weekly charts suggest more time after such a spectacular gain in a leg A to the upside. Some of them are B, but that A was just like almost like a hiccup stopping point. There was nothing there. Okay, I hope I answered that question. So here's another one, a question about Docu. So there were a couple of stocks over the period for my subscribers to my opening call. I put them in this lost and found section. This is a section that says these are the ones that are the ones that we really want to be looking at for the long term. Docu was one. I kind of forgot about it for a while. I shouldn't have. DocuSign trading at 57.71 up $1.72. Not an all-time high, but a recovery high. The last high was a major high back in August of 2018 at 68.35. So it's 11 points away. That's a big, big number, but this is still leg B. Unbelievable. Yeah, leg B to the upside in the weekly chart. I like it. So the question is, question. I have a position, but I'd like to add lower. Okay, that might be difficult right now, but I'm going to say to you, this whole extension from the 53.5 area, that's the part that will be tested at some point. So the 54.20 to 53.80 is really the test area. If you had to ask me, where would just visually, I don't know if it's going to go there, what would be the perfect place? I'd say right in the middle, 52.50 start, where you can add to your position. If you haven't ever had this, that's the place that I'd be looking at it, maybe to start a position. I think it's the right stock. DocuSign, they do the right things. Whatever they do the right things. DocuSign, 2 magic words. Okay, I like it. Basil, can you please look at SJT? Now, what is SJT? I know SJT, don't I? San Juan Basin Realty Trust. Oh, I haven't looked at this for ages. No, I completely forgot about it. Yep, I'll look at it. So it's in leg AB, leg D to the upside in the daily. SJT is trading at $5.18, down 60 cents. Here we go. So I'm putting in Chapman Wave, find the lowest, most obvious low bar, merely count each successively higher peak, A, B, C. When you get to D, other things can happen. Let me just double check that I haven't missed a penny. I don't think I have right here. That's 536, 536. Okay. So the high that was made on Friday was 585, and it's trading right now at 518. That's a whopper of a decline, 10%. So I don't know whether, what are your thoughts on the last 2 days' move? I'm long, but had lightened up on Friday and would like to get back. Oh, okay, good. You see, the way, Mike, the way you've handled this is just, I don't know why you got out, but you did get out. It was perfect, leg D, went above the 200-period moving average, pulling back a little bit before the break comes. I'm going to do a little bit of work on this because this is one, you know, I recollect it from way back that it was one of the sexy stocks that was just flying. I guess San Juan Basin Realty Trust. Let me do a little work and then I'll talk to you about it because I'm saying 480 level is probably where I would add to it. Let's come back. Dow's up 68.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, SJT, which is San Juan Basin Realty Trust, evidently they're in the natural gas pipeline. That was a pretty severe decline. You know, I have a problem with these natural gas. In fact, with a lot of the pipelines, the oil service, when they have these sudden, it's sometimes news related, and you're in a beautiful position, the technicals look good, and then look, the technicals, 90% on the stochastic MACD is good, and yet it plummets 10%. That's what happens with these things. So you have to have, I suspect you have a very much longer term outlook. I like it longer term. I think it's just started to turn the corner, but I would definitely allow that it could come back to just under 5, maybe. Excuse me. Got my noontime sneeze in there. We did 5. What was the low today? 510. Yeah, I think 502 to 485. Bless you. Thank you. I think that's where it could form a base. But now, because of the steepness, it's going to take a little time. I'm even going to say to you, don't be in a rush. You took your profits on Friday. Don't Monday get back in. Take your time. If it does rally, I'd rather be buying strength than weakness. Give it another day or two. Let's look at it together again in the next 2 days. I'm going to put it down here, SJT, one of those, and I'm going to put SJT. Can I read that? Yes, SJT. Okay, so that's what we'll do. Don't be in a rush to get back in. MACD is still good. Stochastic is good. Let it try to form a base in the 120-minute chart right here. Oh, let me just do this before the time runs out. Yes, yes. So SJT's in my automated projections, support levels, 505, 513, 439. Yeah, give it a little time. There's nothing wrong with it, but this is a very severe decline. I'd like to let it filter out and see what's going on. It's on the 14-period moving average. So, folks, we're about to wrap up. You're going to have Steve, you're going to have Dave, you're going to have Tom right afterwards. I just wanted to say my opening call, my daily newsletter, we go very comprehensive look at the markets. Sorry, folks, it was a little late today. I had a bleep. Something happened in my service. I hope it's going to be okay. I'm going to test it once tonight. I'll just say test. Or maybe I'll do a chart for tomorrow, but it'll test, and I think everything should be fine for tomorrow. We had no position changes. We're set. We're good to go. Have a great day. Stay tuned for Steve, and I'll see you tomorrow.